Good morning and welcome back to Almus Market Mornings. The spillages of the sudden resurgence of a trade war-like situation between US and Europe is hitting US bonds. While we discussed yesterday the impact on precious metals, the bonds in the US seem to be getting sold pretty aggressively as well. US 10-year, which is now at 4.22%, has broken out of a range it has followed since the end of September. And of course, for a totally different reason, Japanese yields are also flying, primarily due to increased plans for fiscal spending. The 40-year bond yield has hit 4%, which is the highest level since its debut in 2007. Uh, Good morning, JK. How are you reading these move in the bonds? Japanese yields are showing no signs of stopping.
Good morning, Swaraj. So yesterday was a US holiday, but it's not one of those usual time when US gets into a holiday. All the rest of the market go into a sleep mode, and we have kind of very minimal activity or factors to focus on. Lots to focus on, irrespective of whether US is on a holiday or not. And the major focus, of course, as you said, has been on the Trump's proposal to impose additional 10% levies from 8 European countries if no deal on the Greenland acquisition was reached. And major European countries, besides condemning, they've also been considering various proposals to retaliate. So market definitely got into a risk-off mode. Japanese market was down. We had the European markets, which lost more than 1%. There's a lot of, huge trade relations between US and Europe, and any perception that this is going to get affected will, definitely impact sentiment in a big way. And even, if it gets that serious, we can even see global growth also getting affected. That is the reason why there was a risk of sentiment. Now, what you would normally expect is, if the stocks are under pressure, bonds will perform well, but that was not the case yesterday. Now, there could be several reasons for this. The Japanese yields, as you said, have been soaring this week. 10 and the 30-year gained 12 basis points in the yield, and the 40-year yield in Japan has hit a new all-time high of 4%. So that's also pulled the other yields in other countries also higher, particularly in the US. And for US yields to go up, there are several reasons. One, of course, is the interest costs or the finance cost on the US debt, a huge debt, is also soaring, and market has not really priced in what is in store for the US if there is no really address to this. And of course, there is also an emerging thought process that after the recent moves by US to impose tariffs on the European countries, as well as some earlier proposals that if anyone is dealing with Iran, there will be additional tariff of 25%. There was even a consideration by the US administration whether the data centers in US, which consume a lot of power, and their output being used by other countries, will also lead to some action by the president. These are the things that are leading to some sort of a sell America kind of trade that is emerging again. Possible that people have sold are looking to sell US assets which are anyway extremely overvalued, be it the stocks or the bonds. So that is probably leading the yields also higher. 4.26 was seen on the US 10-year, and clearly, even on a technical basis, at least 4.50 seems to be on the cards for the US 10-year yields. And I think this is also leading to the dollar gaining, so rather the dollar losing out, and euro gaining as a default. So there's some dilemma among the investors, which one is a safe haven. Now, at least that is what is resulting in a range movement between the two currencies. As we get to near 98 half, we see dollar getting bought in there is a dollar index, and as it nears nears 99 half, we see the dollar index getting sold also. That's where the euro is also trading between 16 and 17 half, 1.16 and 1.1750. In the meantime, a lot of focus is also on the yen, which is beset with very many conflicting factors. Rising yields and the threat of intervention is keeping it a bit strong. At the same time, the Prime Minister calling for a snap election on February 8th, and also prospects that they would spend a lot more in the fiscal side if she comes back with a better majority, is also keeping the yen on the defensive. My own bias is that as Japanese yields go up, it is tantamount to a rate rise by the Japan Central Bank, and that could be a supportive factor for the yen to strengthen. And like I said, if 40-year in Japan is yielding 4%, and that could well be attractive for many of the Japanese investors who may well sell their holdings in other countries, particularly the US, where they're largest holders, and invest back in the Japanese bond market. And all this, in fact, is a negative for the US dollar as well. So what we are also looking at is how the leaders who are meeting in Davos from yesterday interact on the various mutual issues. World is definitely not in a sober state. There's a lot of things going on between various countries: US, China, US, Europe, of course, US, India as well. That's the condition we are in, and so the markets are not calm. We did see the gold and silver also hitting new highs yesterday, and that is not surprising as well. As far as India is concerned, USINR made another attempt at 91 yesterday, but just held back from those levels, but doesn't look like it is safe. The move by in the central bank to get the BRICS countries' currencies linked in a technical platform for mutual settlement between the countries on travel and trade is also raising eyebrows. Markets fear that this could also lead to some sort of a sanction by the US in terms of higher tariffs. Uh, you know, because Trump thinks that any move in the BRICS countries is a threat to the dollar. So that will not be surprising if any such things happen. So the sentiment for the rupee remains quite weak. And the stock markets yesterday had another drubbing as earnings reports from major companies were disappointing. So no relief for the rupee. The previous high at 91.07 is likely to be tested today, and we'll see whether the central bank comes in and intervenes once again to keep a lid on the dollar's gains for the time being. So all in all, not a calm situation in the world, and a lot to look forward to. More on the geopolitics rather than on the economic side. Thank you.
Thank you, JK. And of course, today we focused on the bond yields. We are seeing the US bonds being sold, Japanese bonds have been continuously sold. But interestingly, the Japanese rise in yields are also supporting the yen, which was trading at a psychological level of 160 and since then has strengthened a bit. Also, 160 being a level where markets are generally fearing some sort of intervention by BOJ. So that's what's happening, and of course, as JK mentioned, very importantly, the kind of hostile policy US is bringing back, it seems to resurge the sell America trade, and that is a theme we'll closely follow. Apart from that, on the domestic markets, rupee made another attempt towards 91. I mean, now things like it's very quite close to the all-time lows of 91.07, and as JK mentioned, may even be tested today. Stock markets continue to remain weak as earnings disappoint. That's it from us today. Thank you for listening. We'll catch up tomorrow with the fresh round of updates.